So let's consider how companies look at business risk and what an exam question might look like. When companies manage risk, there are quite a few stages they have to go through. As far as this exam is concerned, our main issues are going to be these stages. So, we might be required in a question to actually identify business risks. However, there have also been some questions where the risks have been listed out for us, and then we've had to deal with them. So I suspect the more important stages are the second two up there. Assessing and prioritising involves measuring the risk to try to decide which ones are most important and therefore which ones a company should try to manage first. The variables involved here are likely to be what is the potential impact of the risk, which we might try to measure in financial terms, and secondly, what is the likelihood of that risk? And maybe that's a percentage chance, a probability. There might also be a third variable, because there may well be a risk which is high impact, and maybe it's highly likely to happen, but if it's many years in the future, maybe we don't need to try to manage it today, or in fact, maybe we're not able to manage it today. And you may, in the exam, have to actually assess some risks against those sort of criteria to decide how important they are. The final stage, at least for this exam, is to suggest how those risks could be managed. And you may have seen on another exam paper a rather useful little mnemonic which will help us to remember 4 basic ways of dealing with risk. Four basic ways of dealing with risk. Transfer that risk onto somebody else. And the most common way of doing that is to pay for some insurance. Obviously that comes at a cost, but then all risk management comes at some sort of cost. In some cases, it may be best just to avoid the risk completely, if that's possible. Reducing the risk is the one that we as auditors probably understand the best, as one common way of doing this is using internal controls. However, another potential way that businesses could reduce risk in a more general sense is to diversify, spread their operations among lots of different industries so that if one particular part of the business is suffering, there's a reasonable chance that another bit of the business is doing fairly well. And the final way is not to manage the risk, if you like, to accept it. And don't forget, you have to take risk normally to get some sort of return. So if we decide not to accept any risk, we're not likely to get any sort of return. And the other reason for accepting some risks is that in some cases, there isn't really that much we can do about it. Sometimes you've just got to get on with it. So 4 basic ways of managing risk. What we're going to do now is take a look at a past exam question with business risk in it. It will also refer us back to something we did in audit strategy just before we started doing audit planning, and we'll see how we get on with this. The question we're going to look at is called Ferry. It's from the June 2003 exam paper. So obviously that is not P7, because P7 only came in at the end of 2007, but it's from the corresponding exam paper under the old syllabus, which was pretty much the same syllabus we have now. Okay, so here we go with Ferry. As always, the first thing we're going to do is take a look at what the actual requirements of the question say, and then we can start worrying about the story. As we can see, it's a three-part question. The first bit says, describe what is meant by the term top-down approach in the context of business risk audit methodology. Well, as you may well remember from audit strategy, the top-down approach is that method where we look at business risks and then use those to determine why the accounts might be wrong, the financial statement risks. So for 5 marks, we need to put a little plan together, and the way to look at it is, for 5 marks, we're probably looking to make around about 5 comments. So we need to think about the keywords we need to answer that, and we'll come back to that in a second or two. Parts B and C are clearly linked together. Part B wants us to identify and explain the business risks, and Part C describe the processes to manage those business risks. 10 marks for each. C is clearly linked to B, and so when I answer B and C, I'll probably answer them together in 2 columns next to each other. Notice in Part B it says identify and explain. There is a big danger with business risk that we simply copy things out of the question without actually saying why they're risks.